Marco Papik.
All right, Marco, good morning. How are we doing, sir?
Doing great. How are you doing?
Well, what is happening in the world? It is a risk-off moment. Will it continue? Will it get worse before it gets better? Or will it get ugly before it gets better?
Well, I think that you pretty much articulated this very well over the course of the first 10 minutes of your show. I mean, I think it probably has to get worse. I think that in terms of new news on the tariff front, I don't think it will get worse. I think, as Treasury Secretary Scott Bessent said, this is peak in terms of, this is the ceiling in terms of tariffs. And I believe him. And I think that it was interesting today, Peter Navarro came out and said, this is, of course, one of President Trump's advisors, quite hawkish on trade. He mentioned that there would be no negotiations. This is it. This is about changing the global system, and it's about American jobs. And then President Trump, literally minutes later on his Air Force One, countered that view and said, sure, I am open to negotiations, but I have to, be impressed with the offers. And I think that the noose of material constraints is going to tighten around President Trump. You had Chuck Grassley, a veteran Republican from Iowa, introduce a bill that would limit the ability of the president, of the White House, of the executive to impose tariffs. So I think that's important. I mean, it's just early stages, probably going to fail. But as the pain in the market and the economy and in the polling, not just President Trump's approval rating, but that of various congressional Republican leaders, as that starts to really hurt, you will see more of such moves that will push President Trump to basically flip this from some sort of a neo-McKinleyist, reshaping of global trade towards more of a, no, I was just negotiating the whole time line.
Peter Maguire is well on the show with us. Peter, hi, morning. Just wondering as to how it's a risk-off across asset classes. One would have thought at least gold would do okay.
Well, good morning, Aisha. I mean, US dollar, and building on what your fellow guest and Nikunj mentioned, US dollar was savaged. There's no doubt about it. You're under 102 now, that US dollar index. So that was punched down very, very hard. Gold held steady. Crude crashed 7%, as we know. And OPEC came to, a comment there as far as increasing production. And then if you're looking at, equity markets, I think we're just in a state of, well, I'm not going to say free fall, but we're certainly in a some sort of very strong downdraft. And it'll be interesting to see whether we get another sell-off. We're selling off fairly heavily in Asia trade today. Nikkei's down the best part of 2.6%. So let's see how New York trades tonight and the impact that is for the end of the week. As far as commentary as far as President Trump and Peter Navarro and Scott Bessent and of course Howard Lutnick, I think we've got to watch those four and just be mindful of their comments. And yes, I think I agree with Nikunj. It'll take a bit of time for this to work through the market, Aisha.
Okay, so what really could happen in terms of a sequence of events now? Marco, if I could just throw that question to you. Will the bond market be the first indicator of things to settle down? Could it come from the commodity market, or it will come from good old equities?
I think that the first sign that things are settling down, in other words, that things are getting better, would have to be the asset that's been selling off for the past 2 months, which is very interesting. That asset has nothing to do with tariffs, has nothing to do with global trade, quite frankly, and that's big tech in the US. So I think that you've all identified the US dollar as a very confusing asset. Why has it sold off so much? Trade war was supposed to be good for the United States in relative terms. And the US dollar is a counter-cyclical currency that's supposed to be actually a safe haven in a recession. And I think that if you look at the trajectory of US dollar and big tech, both have been selling off for basically the entire year. And they really started selling off because US fiscal policy has been disappointing relative to expectations. We have Mr. Pump Prime in the White House. We have a supposed economic populist who will increase nominal GDP growth of the US. But the fact of the matter is that the US is at the end of its fiscal constraints. And so fiscal policy is disappointing. And that really started off, I think, the end of US exceptionalism. And I don't think it's really going to be reversed if President Trump reverses his tariffs. I think we're at this secular moment of rotation out of the US. That's going to be the key takeaway for the next 5 years, which is good for India as an example. It's good for emerging markets in general and commodities over the course of the next 5 years. But that's why, if you're looking for sort of a stabilization and for the end of this, we do need to have the asset that's been selling off the most, that's led all of this, stabilize.
Well, really nice to have you, Marco and ET Now. Thank you for joining us. Peter.
Hello, Nikunj.
So in this decline, is it a good idea to buy growth, which is buy copper, buy steel, buy industrial metals, or one should say, no growth right now. Let me go back to gold and silver?
I think I look at what happened as far as copper. You're well down, nearly down 4%. A lot of those other industrial metals were sold off heavily. I think one needs to be, and silver, you can't take your eye off that, down 8%. So, when you're thinking of that, gold was down a touch, and as it says on the screen, 1.7% down. I would be probably chasing gold more than anything in the short run, and that's got to be over the rest of the next couple of weeks as some form of safe haven. It's had a tremendous rally to the upside, as we know. I feel as though that a lot of holders of gold retail wouldn't have sold their positions. If you're in the paper market, that's a different situation completely. But that physical attraction, and we all understand Asia and, of course, India's appetite towards it, I don't think that's going to wane anytime soon. And that's probably forcing more and more people to buy physical. And I think that, over the next couple of weeks, that's a good place to be. And I feel as though you're going to see further softness across many of those commodities, especially the oil sector.
All right, Peter, appreciate your time. Thank you for joining us.
If you like this video, then like, share and subscribe to ET Now.